it's due for a correction. Is it a tidal wave? Is it a ripple on a pond? There's a lot of fear in the market. I think there's a lot of uncertainty coming here.
It's the final leg of the bull market.
Yeah, and it could be 3 to 9 months.
That final leg could be huge.
The clock's ticking. What I'm measuring is liquidity relative to the sizing of the market. And when that divergence gets too far apart, that's an unstable system. And that has started. But that's when the fireworks happen.
Archie.
Some people have a fear at the top that there will not be a bear market. Are the cycles over?
I think that Bitcoin is now the first entry of a global macro asset. The first time that's one has come into the scene that trades at scale in 150 years. And that's subject to cycles. And what are those cycles? They're global macro. And what is the leading determiner? Global liquidity. In other words, money printing. The cycles of money printing. It happens to be every 4 years. We always thought it was a halving impulsing, and then the supply shock giving us a bullish push. I think that's always been true in the past, but we also had this timing that was set up when Satoshi released Bitcoin. It was just after the world financial crisis. He talked about it and etched it into the Genesis block, and that was when the world was injecting liquidity, meaning printing money to save the economy. And so we were synced in these two superimposed cycles, the first one being the halving, the second one being global macro. And used to be the halving was most important, because when 25 Bitcoins per 50 Bitcoins per block drops to 25, that's a big shock. And now that's sort of diluted out and not that significant. It's this last one has taken us below the inflation rate of gold, and the next one will have that again, and it's not that significant. So we have global liquidity cycles that is on a 4-year cycle, and that's a determiner. And then we have this other cycle called a business cycle, a business downturn cycle. Tends to be every decade, give or take. And so those are the two cycles I think are more important now. And I think that we have the liquidity cycle that's coming up, that the 4-year, it's coming up soon. We've got a business cycle, haven't experienced a bad one. We had one in COVID because of obvious reasons. They printed a lot of money, too much, as everyone is talking about now, and why the interest rate's been hiked up so high to stave off the crazy inflation that's coming off it. But if you look at and remove that one, this sort of anomaly of COVID, and you look at what was the cycle before that, that was 2008 world financial crisis. So Bitcoin's never gone through a business cycle downturn, a proper one, and it looks like that might be happening now.
Do you think a downturn is happening now, or an upswing in business cycle?
Downturn. And I think that the US tariffs, and there's a whole lot of things that are shaking the market. And I think it's, people, I think, feel it. I think we talk about the everything bubble. It's due for a correction on the business cycle. And so you got a liquidity cycle, business cycle coming into it. And I think that sure, Bitcoin, our ecosystem's getting really strong. It's I think the impacts of that are less, but it's a global macro asset now, and so we need to look a bit bigger into the pools of capital that are coming into this asset and going to be leaving it when people need the liquidity, they need the money back. And so, I think we'll have a cycle. Yeah, I think we'll forever have these cycles, and we integrate to the world financial system as we, get bigger and bigger and bigger. We're $2 trillion now in market cap, $1 trillion of capital gone into it. There's, whatever number you pick. I mean, we can talk about $900 trillion of wealth assets. I think that we'll capture some of that, and it's subject to cycles, the global cycles that shake the world.
So do you now think that the halvening is reduced to a more of a cultural phenomenon rather than a mathematical solution, supply side shock?
No, I think, well, it has an impact, everything. But is it a tidal wave? Is it a surfable wave? Is it a ripple on a pond? And it's going from a tidal wave to a ripple on the pond. And there's other big wave generators out there called the global liquidity cycle and the business downturn cycle of the global economy. They are the waves now. Before it was a tidal wave, supply shock of the emissions of Bitcoin. That was the only game in town.
Well, we're now seeing, so for example, since the MicroStrategy announced their 21-21 plan, which they've absolutely smashed out of the park, there have been a proliferation of Bitcoin treasury companies as well. And those companies alone, since then, I think it was late November 2024, since then, we're only talking about 8 or 9 months. They've bought however many multiples of the total issuance of Bitcoin. So just the new entrants alone from a Bitcoin treasury point of view makes the whole, the supply shock from the halving point of view almost completely irrelevant. It's minuscule that, is it even a ripple anymore? It could just be like the changing sentiment of one major holder. Or even an OG saying, I want to cash out 9 billion, for example, which recently happened, and Bitcoin absorbed that in the space of 36 hours. But that supply, that decision by one OG whale to do to liquidate a long holding, and we're getting so many different, participants in the market that render the impact of the halving to almost complete irrelevance. But you think it still has some relevance?
Well, sure. It's like,
apart from the fact that we all tweet about it 3 months before it happens and 6 weeks after it happens.
I mean, it does have some impact. Is it relevant to the price? Sure, it'll have an impact, but will you notice it? That impact exists. Because, I'm an analyst, I'm a quant, I want to measure all this. I want to measure demand and supply and liquidity movements. And of course, it'll have an impact. Whether or not it's 10 times smaller, 100 times smaller, 1,000 times smaller is the thing. And it used to be in the past cycle, we'd always talk about the emissions of the miners, and that's the sell pressure and who's buying that up, and because that was significant. I don't think people talk about that anymore because the stuff is overwhelmingly... the buys from the treasury comes overwhelms the mining. That's for sure. Because you can think about us now being in an inflation rate of half that of gold. Gold's around, I think 2.4%. I think.
Okay.
2.4. It varies between 2 and 3%. Sometimes it might even go higher because when it pumps, the miners get to action and dig more out of the ground or whatever they do. Bitcoin's currently, I think, 1.7%, and it's going to go from 1.7 at the next halving to half of that, right? And so it's way below gold now, and so it doesn't really have too much impact.
It seems to be the bias is towards rate cuts at some point. The business cycle, as you said, is softening, but by the same token, we've been in a bull run for quite some time. Does that just mean this bull market has a lot longer to go?
I think that the economy is very, very brittle, and if you were to look at the liquidity injection, as we enter a bearish event, money is always printed. It's printed because you're seeing some sort of bumps in the road and you want to soften it. And so if you look at when did the rates drop, well, it's pretty late. The interest rates are still pretty high. There's not a lot of liquidity coming into the system. The US economy is strong, right? That's the talk. If you're late, it's the global economy. If we're going to talk about not Bitcoin, the global economy is this big, huge ship, and you have to act way before hitting the iceberg. And if you hit the iceberg and you're printing money,
which has not been the track record of the Federal Reserve anyway. They've been quite late a couple of times. Well, at least according to commentary, they probably think they've done a really, really good job of timing their moves. But I see those two things kind of contrasting one another. By the same, on one hand, we've got a bull market that's run quite a long time, and one would expect, like by the end of this year, if we're to follow the regular timings of Bitcoin cycles, we should be peaking and starting a bear market in, I guess, quarter one at max, quarter two, early quarter two. But then we've got, a bunch of actions that could be taken by policymakers that could actually spur further the bull market being extended further from where we are now. So, like, do you see one narrative over the other, or you're not quite sure which one will prevail?
Well, right now, the liquidity that's in the system, you got to look at what's being done right now. We can speculate what the Fed will do, as is Goldman, and as you said, they've been wrong a lot of times. And like right now, the rates are still very, very high given the fragility of the economy. You got tariffs coming in. There's all that. You see the last pullback on the S&P, right? That was the tariff scare, and it recovered. I think that there's a lot of fear in the market for that large pullback because of scares of what could happen to this economy. And honestly, we've been in how many decades of a globalized economy where there's been mainly free trade, and now we're going into a new regime where tariffs are going up everywhere. Like, what's the behavior of that market? There's a lot of unknowns here. I think the market will be quite, I think it'll be quite. The actors behind the market, the people with the money, will probably be risk off because they don't like uncertainty. And I think there's a lot of uncertainty coming here. So and then if you map it onto the general liquidity cycle, I think it's liquidity's increasing. It's fine, but that will stop. And we're coming into a very uncertain time. And so certainly in my wheelhouse, because really what I'm talking about is not my wheelhouse, right? This is the realm of economists. They do their stuff. I do measurement of liquidity within Bitcoin, and that's dropping. It's dropping right now. It's been dropping for months.
What is that a function of then? Why is it dropping? Like, is something else pulling liquidity out? Or is it just the demand has just been running strong for a while and it's just tapering?
I just do really dumb shit, which is measure the flow of capital coming in. I don't look at why. I don't speculate why. I can, but I'd probably be wrong. It's not coming in at the same rate. So it tells me that we're in this phase where liquidity is starting to reduce relative to the growth of the price. And that divergence is growing bigger and bigger. And at a certain point, the clock stops ticking, unless there's a massive injection of liquidity some point, right?
In the broader economy?
No, in the Bitcoin network, right?
Okay.
But I've never seen that. We measure it at peaks and then it starts tailing. You might get a little bit of this choppiness, and those choppiness adds to another bullish run, but the clock's ticking. And so... yeah, we're late phase in the bull market.
I was just about to ask. We'll finish this topic. You'll definitely say this is late stage of the bull market in the final. It's the final leg of the bull market.
Yeah, and that's when things get interesting.
But to be clear, that final leg
could be huge.
Could be 3 to 9 months.
It could be 3 to 9 months. Yeah, I think that's a good sort of window. And also, if you look at some of the past cycles when the liquidity started sort of dropping away, that's when the fireworks happened. That's when Bitcoin ran up from, say, 2.5 to 5,000 to $20,000, right? That's a blow off top.
But that's a fascinating dynamic, though, because if liquidity is driving it, what happens is that just pure froth and speculation from late entrants into the market? Like, what's happening there? Why does it continue to run away when the main instigator of the bull run, which is liquidity, is tapering off and then falling away rapidly? Why does the price continue to run?
Because people are buying.
Yeah, why? How are they buying? If liquidity is driving it, and when liquidity is pulled out, why do people continue to buy? Like, which people are buying?
Well, not every participant is measuring the liquidity. And maybe you're short time focused, maybe you're buying for a long time. I don't know what. But the thing is, what I'm measuring is the liquidity relative to the sizing of the market. And when that divergence gets too far apart, that's an unstable system. And that is started, and that's a timing signature. People can still buy, but if you're tracking, and if you look in absolute terms, sure, there's more money coming in, and still coming in, but is the rate of it coming in supportive of the price moving up? And if it's running up too far, it's got to come back to earth. And then when it starts coming in back down to earth, that has this follow-on impact where liquidity starts drying up even more, and then this thing feeds on itself into a bear market.